welcome to today's reality check. You've returned once again, so we thank you for that.
Thank you.
And today we're going to talk about how much is my home worth?
Yeah, and what are all these different types of values?
Oh my God. Because don't we always get, you can be walking down the street and we'll literally have people like, oh, you're a realtor. How much is my house worth? And I'm like, why do you need to know?
And who's asking?
And who's asking? Yes. So that's really the reality, right? It depends why you need to know and who's asking. So on today's reality check, we're going to do a deep dive into the 3 types of home values, who determines them, and how.
Yeah.
So only 3. So unlike our last episode where we had 43 or 48 million terms, we only going to talk about 3 different things.
3 meaty ones, though.
Yeah, 3 meaty ones. So we're going to talk about tax value, appraised value,
and then market value.
and market value.
And
right.
one might think, wouldn't those all be the same?
No,
No,
not at all.
not at all.
So
Let's start with tax value.
let's talk about tax value. What is tax value?
Well, that's what the county, like your local jurisdiction, your local city, that's what they say it's worth.
That's what they say it's worth, right? That is determined by algorithms. It's not algorithms like what you see on Z or any of those online big portals that kind of give you your estimated value, which are also way off. But it's determined by recent sales. So they do kind of look at like neighborhoods, and as homes sell, they say, oh, well, this one's a 5-bedroom, this one's a 5-bedroom. That means that these properties are all generally worth this much. Now, what do we know about tax values typically value-wise? Like, where do they come in on the scale?
They're usually at the bottom, which you might think like,
oh my God, why do they think my house is worth $1 million?
when really I'm like, hey, that's all they think it's worth.
No, you want the government to think it's not worth very much.
Yeah, because that's what you're going to be paying on.
That's what you're paying taxes on, right? So unless you have a really, really, really good reason to challenge that tax value, like, I don't know, you really want to prove to everybody that you have 5 bedrooms in your house and not 4.
I actually have a neighbor that's doing that right now.
Really?
Yeah.
Oh my God.
The county says they have less than what they actually have.
And they want to make sure the county knows that they have 5 bedrooms.
They are upstanding citizens.
And they're going to probably be paying more in taxes.
They will be paying more in taxes.
So, okay. Don't know why they're doing that. Anyway, but
they did not consult their local realtor before they did that.
They did not. So, sometimes there's reasons why you might want it to be higher, but honestly, in the scheme of things, it is going to be the lowest of the 3 values. Yeah. It's going to be based on square footage. It's going to be based on number of bedrooms, bathrooms, lot size,
the facts,
and the type of property.
Yep.
Period. They don't know what it looks like inside.
No.
They don't know that you've done updates or that you've not done updates.
No.
Right?
So nothing. Sticks and bricks is what a coworker I work with says.
Exactly.
Just on the facts.
So you can request them to reevaluate it. You can
typically,
challenge it.
we see them challenged to make them lower.
Yeah.
Typically, that's what we see.
Yep. But and just know you can do that. Again, lower, yes. Don't challenge them for higher. That's just weird. Anyhow, so tax value. That's pretty straightforward. So don't be sad when you get your tax thing that you think your house isn't worth as much. It's fine.
Be happy.
It's good.
Yeah,
that's good. Okay, the next one is the appraised value.
Yeah, and that's just what another person thinks it's worth, but this person is an appraiser. They hold a license.
They're basically, now there's 2 types of appraisals. Well, 3. So there's the appraiser for the lender. Well, I guess 2 of them are for the lender still. So you have appraisers for a new purchase for the lender, and for a refinance or a home equity line of credit. So that's also for the lender.
Yeah.
And then you have appraisals for your own edification. I don't know. Some
independent appraisals.
Some people just have independent appraisals. I do find, and we'll talk about that in a second, because those tend to be very different.
Yes, most definitely.
But the appraisal done for the lender is done to protect the lender, period.
Yes. They want to make sure that in the event that you are not paying, and they have to boot you out the house, they want to make sure that they're going to be able to get back everything that they put into that property at least.
They want to get their money back. That's all. So that appraisal is done to protect them. It typically, to say typical is, but I would say 90% of the time, maybe 85% of the time, it comes in pretty much at contract.
sometimes like eerily, like the prices are
your
like
contract
weird prices.
Your contract can be for like $782,000, $82,007,
and that's exactly what the appraisal comes in at. And you're like,
that seems very weird. Or else they round up to the closest, $25 or something like the closest $100. Or sometimes they come in a little high. Yeah, I mean, but it's usually not like hundreds of thousands of dollars or anything crazy. It would be great, yeah. Sometimes they come in low.
Oh yeah, and when they come in low and you're buying a house,
there's two ways of looking at it. Sometimes you can be like, woohoo, I don't have to pay as much for that house, but that's only going to work if you have an appraisal contingency,
and that seller's willing to,
seller's willing to come down that low. If sometimes in that case, when you have a contingency that still doesn't guarantee they'll drop that low, it just means that that's a discussion now that they're going to have with you. Yeah. Sometimes you split the difference. You still have to bring cash to the table. It's not good.
Yeah, and that's when usually the agents get together and help negotiate some sort of compromise and a path forward for both parties.
Right. But before we even get that far, we often will dispute it.
Yeah, we can challenge.
So,
we can try to challenge them.
The buyer
can
challenge.
Buyer can try to challenge them.
The buyer can challenge the appraisal.
Yeah.
Now, why would you want to do that? Because sometimes you're thinking like, why would I want to challenge them to have the price come up? Well, you would if that means the seller is not going to sell it to you.
Yeah. That appraisal comes in $10,000 lower than what you're under contract for.
And you don't have $10,000 cash to pay for it. You're going to want to fight the appraiser to bring that value up.
Yeah, especially if you go through the report and you find something that's a little off.
Discrepancies.
Or maybe there's a discrepancy there.
Yeah, and that's not unusual. I mean,
no,
I have found things listed as condos. They were not condos. I have found things listed as, wrong number of bedrooms, wrong square footage, bathrooms. Just incorrect stuff. And I would not want to be an appraiser. I mean, they have like all sorts of like wackadoodle stuff that like they have formulas and whatnot. There's a lot of, not that I'm bad at math, but there's a lot of math. They do a lot of mathy things.
Well, there's a lot of regulation too.
There's a lot of regulation
in that industry for sure.
And you would think that means that there's really a definitive answer, but it's like weird. It's like there's not. And how I typically describe it is it's one person's opinion on that day at that time of the value of your home. Mm-hmm. And it's based on the current sale comps. And it's within a window, right?
Window of time, and usually a window like locationally too.
Yes. So they look at this area around your home, and they look at this window of time around your purchase. Yeah. And if something fell a week out of it, or is like a hair outside of that distance, then they're like, nope,
doesn't count. I've had that told to me before too.
Yeah. So in the world of VA loans, they have a term that they use called
Tidewater.
Yeah. So it's kind of nice because they give us a little heads up.
Yeah, so I actually had this happen in my own. I've had it happen with clients, but the first time I was involved in one of these, I was selling my own property that my husband and I owned, and it was to a VA buyer. Mm-hmm. And unfortunately, the appraisal came in a little low, but the nice part was that we got a heads up on it. Yeah. So what happened was, as the listing agent, is the buyer's lender contacted me and said, hey, Tidewater has been initiated on this file.
And if you don't know what that means, you're like, look outside. You're like looking up, like, am I getting flooded?
Is there going to be a flood? There's no water.
It's good.
There's no water, but it's basically a process that's all laid out for you, where they ask you to give, hey, give us your 3 best comps that you used to price this property, and we want to make sure that we're cross-referencing against what we looked at. They're not going to send you a copy of that, and they're not going to tell you what the value is just yet. Nope. But they're going to say, hey, it's going to come in low. So we want to see what you saw before we make a final decision, right, which is a really nice benefit to have.
They let you state your case.
Yeah. Give me a chance to fight, okay?
Yep. And then sometimes it works out and sometimes it doesn't. I had a situation one time where I had, where we struggle a lot around here is if you have a super unique property. Yeah. So we're the world of colonials, like for the most part. I mean, there's definitely pockets where that's not the case, but we are the world of colonial homes. And I had a super, super contemporary, mid-century contemporary home in a pocket of colonial homes. Oh, and it had an atrium with a glass, and it was like amazingly large, and it sat on a big lot, and it was all fenced, and it was just amazing, beautiful home. But the appraiser, because they compare it against like properties within a certain distance, blah, 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 it came in I think it came in $60,000 low.
Oh, I had one come in 90.
Oh,
that was my worst.
That
was 2020. There's a lot of weird things happening in 2020.
This was pre-2020, so this was before everything got crazy. And I was able, we disputed it. The buyer disputed it. Okay. Thank goodness. I was the listing agent.
Okay.
The buyer disputed it. I was able to come up with a bunch of comps. Okay. And I actually they sent out a second appraisal. Well, this is interesting too. So we challenged it. The lender called for a new appraiser to come out. So it wasn't even like they challenged it with the current appraiser. They brought in a new appraiser.
Let's just start over.
Yeah, let's just start over. That appraiser said, "Thank you, no thank you." The property was so unique that they were like,
I want nothing to do with this.
I'm not doing this. I was like, what?
I didn't know that was a thing. Okay.
Learn something new every day.
You're like, I do not need this business.
I was like, this is not how this works. So we waited, and somebody else finally said, okay. And I met the appraiser out there, and I'm like going through everything, and I'm talking to him about, and I told him about how I determined the sale price, which was not normal. Like, I found like homes. There was a pocket of very similar homes that were not close by, though.
I can't imagine how many hours of research that was.
Oh my God. And I adjusted the value down based on the location.
Okay.
But I used the similar properties. Like, I actually had a really pretty well thought out.
You were ready.
I was. He was like, wow, that's really impressive. He's like, I really can't use it, but I admire
it. It does not fit within the parameters of what I'm allowed to do. It does not fit in the parameters.
But we ended up with they ended up coming up another $40,000.
Wow, that's huge. Yeah.
That's a huge discrepancy. And I use that story, and these stories are used to illustrate that it is literally one person's opinion of the value at that time. And it is based on parameters. But this was just a situation, we had multiple offers on it. Like, people loved this home. But it was not a colonial home. Yeah. It didn't fit with the other colonial homes in the area. So those are really interesting things. The thing about appraisals is that they do, in a sense, affect market value. So we're going to talk about market value. And market value is, so appraisal value comes from
so that's
appraisers.
I explain to clients that is what a bank sees the value as, and that is what they are willing to issue a loan against.
Right. But that's the most important thing. That's what the bank is willing to lend. It doesn't mean that's what your house is worth, really.
It doesn't mean that's what you think it's worth or anyone thinks it's worth. That's just what the bank thinks it's worth.
Via some person.
Yeah. Bob.
Bob. or Jane.
Whoever it is.
Yeah. And the tax value is just what the government, based on some random algorithm, says that your property is worth.
Yeah.
Market value. Market value is where the art. That's the artistry of. I mean, it is, right? Isn't market value an art?
It really is. And I think the more in-depth you are with market conditions, the more active you are in the industry. If you're actually selling real estate, I hate to say you get a sense for the feeling and you get a sense for the cycles that we go through. You can almost, even in these uncertain times, like with the market being a little wild these last couple of years, you can see in advance when trends are happening and what buyers are expecting and anticipating and what banks are doing when it comes to appraisals.
And what's interesting about market value is that this is, first and foremost, before I get too far, this is where realtors come in. Yeah. We are the ones who determine, technically the market determines market value.
But we are the ones that help you figure out what that number is.
We translate that for you, right? We are the interpreters of the market, and we help you determine what that market value is. Now, we use it using the current sale comps.
Yeah, right? We're using data too.
And we're using, in some cases, some appraised data comes into that, right? We may adjust price up or down. And where we tend to bring in a lot of value is a lot of things happen with the market right here, right this minute. So looking at what sold 2 months ago is not what's going on right this minute.
No.
And that sometimes, we all know the term supply and demand.
Yeah.
What does supply and demand mean?
I mean, it's literally, there's a finite amount of supply, and then that is the interest in that is kind of determined by how much demand, how many people actually want that supply.
Yeah. If you have less supply, your dollar value goes up.
Yeah.
Higher supply, your dollar value goes down. Yeah. I mean, it's not like super low, but you know.
And it's not just homes, it's like literally everything in life. You know, I years ago came from the wireless world, and iPhones were huge with supply and demand. Right. You know, there was a finite number of phones produced because then there was more demand because it was harder to get and everyone wanted to go. And you remember those lines around stores? I remember
they would wrap around, they made the news all the time.
All the time. But yeah, this happens with your homes too. Like, and I think 2020 was a really good, like, recent example of when we saw demand just start to skyrocket.
Demand skyrocketed, and a lot of times what we do is we help interpret the market at that moment. So I will tell my clients and tell me if you do something different, but when I'm meeting with somebody who wants to sell a home, I bring my comparative market analysis, my CMA, and I say, this is what I think the value of your home is. Now, that's also based on condition, so we make adjustments based on condition.
Totally.
But we say this is the range that I think we're in. But if we're not going on the market for 3 months, I pull
that is a penciled in number.
That's a penciled in number. That could change. That could change drastically one way or the other. I mean, it could go good or bad.
Either way.
And so, you know, you have to be like, okay, this is what I think is going to happen. But if you're talking 3 months from now, I pull the data the weekend we go on the market.
Oh, again, yeah.
I'm going to pull not the sales data, the active. I want to know what our competition is.
What's our competition? What recently went under contract? What's coming that's not active on the market yet? So we know what kind of actual supply we're going to be facing.
Right. Because that's the real determination. If you are the only one selling a widget at the time, everybody wants that widget, they're going to pay a lot of money for a widget.
Yeah, but if there's
same thing with a home,
a lot of widgets.
Yeah, but it's the same thing with the home. If you're the only one with an N-unit townhome in a certain location, you can probably put a little higher price tag on it than if you are one of 20 at that particular time. So that's where we determine some things.
Some market value.
But let's also talk about like upgrades, condition, location.
Yeah.
And some of that can be very, so like an appraiser may give little value in the scheme of things. So we're talking, let's say, an $800,000 home.
Okay.
And maybe one home, we're comparing two homes, they're exactly the same floor plan, exactly the same everything. Okay. One home has carpet and one home has hardwood floors.
Yes.
And maybe the appraiser adjusts the hardwood floor home by $15,000. Okay. So it's worth more on the appraised.
15 more than the carpet.
15 more than the carpet. Okay. What do we know about that? What's the market going to tell you about that?
Well, I will tell you that number means absolutely nothing to the market, and it could be either way. It could be a good way or a bad way. Whatever buyers are seeking and whatever is in demand at that given time will determine what a buyer actually feels the value is, not $15,000.
Right. And I will tell you, I've seen this happen where you have the same exact properties and one has carpet and one has hardwood floors, and right now everybody wants hardwood floors or solid surface, some sort of carpeted floor. Yeah. And that is the market preferred property.
So that one will get multiple
this one will get multiple offers. It may get bid up a whole bunch of money, and this one won't get anything.
Yeah. So I tell my clients go after that one. We'll just put your floors in, whatever you want afterwards.
But sometimes people don't have the money to do that.
Sometimes they don't.
Or the time or whatever it is. And that's just an easy example. But there's a lot of things where the market will make a determination on what this is worth to them. And buying that home that has the updated kitchen and the hardwood floors.
A little bit of the HGTV effect there.
Yeah. And I don't mean a bad flip. But I mean
you want
like
the pretty. You want it to look
and
like
you want it move-in ready. Yeah. Move-in ready versus I got to do a lot of work to it. Even if that work only is $15,000, you're not going to want to pay $15,000 less. You're going to want to pay $50,000 less, or maybe not 50, but 40,000 less
to make it worth it.
To make it worth it, because now you have to spend time and money and energy doing that. So the market value is really where a good realtor comes in, and we really help decipher what's going on out there. We understand trends.
Yeah.
Just like I said about the hardwood floors. I mean, there was a time in the world when they rolled out carpeting, it was a luxury. People wanted carpeting.
That's fascinating.
They covered beautiful hardwood floors with carpeting.
Well, that I believe.
Yeah. In the
I mean,
70s.
and they put carpet in bathrooms, so why not? Anything goes.
all the rich posh people in the 60s got carpeting.
They just wanted softness under their feet.
Exactly. So in the bathrooms, yes, under the toilets. It's very weird.
Carpet and water.
Yes, carpet and
not
water.
a good suggestion.
And pee.
I was trying to be politically correct.
Whatever. This is a podcast. We don't have to be politically correct. But there are things that determine a much higher market value. So we are here to help. We are here to help you decide what that is, what's worth putting into your home to make those changes, whatever. So what are the things we hear from buyers when we're out there? We're like,
we hear all sorts of things.
Well, yeah. But this one definitely is.
I don't want to overpay. I don't want to pay too much.
I don't want to pay.
I don't want to pay more than what it's worth.
I don't want to pay more than what it's worth. Oh my goodness.
Well, what is it worth to you?
What's it worth to you? Because that's what it's worth.
Yeah.
Don't get me wrong. We are not in the business of like, hey, dump your wallet out on this property. That's not the point.
I'm sure we both tried to talk many people out of
yes, all
transactions
the time.
where we don't think it's in their best interest.
You told me you wanted to stay under this price point. Why are we looking at homes over this price point?
I'm confused. What changed?
What changed? But the whole I don't want to overpay. You're not overpaying unless you are paying more than you think the home is worth to you.
Yeah.
If it's a home you want and you can afford it and that's what you're willing to pay for it, then that is what it is worth.
Yeah.
And what's interesting is that regardless of what the appraisal amount comes in, guess what it is
this
now?
This is my favorite part. It's the market price, the price that you closed for.
It's the new comp.
So guess what? When you perceivably overpaid, you haven't, because now you just set the new standard for what properties in that area you're going for.
So you did not, that was one person's opinion at that time. Please don't think that we're trying to say overpay.
Please
not
don't.
overpay.
In fact, I don't want you to overpay.
We don't want you to, and overpaying is the wrong word.
Subjective, yeah.
But we don't want you just randomly throwing money at things. We are going to give you like, hey, this is what we think it's going to appraise for. This is what we think you're safe offering.
And we're going to know your situation. Like, hey, we know that you're thinking about selling this property in 3 to 5 years, and here's what may happen given those circumstances. Yeah. Or, hey, we know that you plan on staying here and it's your forever home.
Or we know that you have X dollars in cash that you can cover an appraisal delta, or whatever. Yeah. So, we just need to make sure that that overpaying thing is a myth. Right? It's really just your opinion. Mm-hmm. I love when neighbors are like, he overpaid for that. And I'm like, did he? Because he's living there.
You kind of wanted to, right? Because that's now the new comp for your neighborhood.
That's the new comp. Yeah. But at any rate, so that's what our job is when it comes to home values. Our job is to give you the best advice regarding the market value, the appraised value. We do try to give you an idea of what it's going to appraise for, because if you're buying it, we want you to stay.
We want you to be prepared too.
We want you to be prepared. If you have to pay a cash delta because you're offering over the appraised value, we want you to have at least a good idea of what that's going to be, so we can be sure if that's something you can afford.
Yeah.
We provide additional information. We make sure that it's. The other thing is, it's not our job to stop you from buying something that you want. I actually hear this from agents every now and then. They're like, I wouldn't let my client buy that, overpay for that home. That's like, it always makes me laugh. And I'm like,
that's not my decision.
It's not our decision to make. It is our job to educate you.
Yes.
Make sure that you have all the facts.
And that you're making an informed decision.
That you're making an informed decision. And then ultimately it's your decision, and we will help you do what you decide you want to do.
Most definitely.
Only you can determine what something is worth to you. And I say that to my clients all the time, and they're like, well, how much over asking do you think we should make? And I'm like, I can't make that decision for you. All I can do is give you the data.
Yeah.
And you have to determine what you're comfortable offering.
Yeah.
So basically, in summary.
Yeah, summary. So we got tax value, and that's Uncle Sam. That's what the government says
we want that
property is worth. Yeah, so we want it low. And we have appraised value.
Appraised value. That one person, one day, one time,
one dude, one person, and that's typically for the bank, for the financial
lender.
Institution, and then we have market value, which is honestly what a real estate agent is going to help a seller determine, and then it's also what a buyer is willing to pay for a property, and it's given all of the market conditions, given supply, given demand, given everything that's going on.
Exactly. So please, if you're thinking about buying or selling a home, reach out to your realtor, your favorite realtor.
Yes.
It could be one of us.
And if you don't have a favorite realtor,
it could be one of us. But also, thank you for joining us on this episode. Please make sure you leave your comments below. Make sure you share our link with your friends. Tell everybody about us. And we'll see you on our next episode. And as always, make sure that you spay and neuter your pets. Thank you for joining us.